On. Hi, everyone. My name is Andia Chakava. I'm the Investment Director at the Machel Trust, and I'm here to talk to you about how to invest in women entrepreneurs. So, there is currently a financing gap of 285 billion globally and about 42 billion in Africa on investing in women entrepreneurs. And when we think about it, we can ask ourselves, how did we get here with such a large gap? Well, I think one of the key things that we need to understand is that many times women entrepreneurs opt out of applying for finance. Women represent only 36% of total bank customers worldwide, according to the Financial Alliance for Women. These percentages are even lower at 18% when women's share of the average credit portfolios is considered, with an acute shortage in the business banking portfolio. Why would such a discrepancy exist? Well, there is quite a bit of unconscious bias. It's not only about the hesitation on the demand side, but also on the supply side. IFC demonstrates that female deal partners invest in twice as many female deals than their male counterparts. We, both men and women, also have gender biases when it comes to women pitching whilst pregnant, operating in male-dominated fields, and or being an entrepreneur within a startup. We also have the case of evidence being limited, and role models of the success are not necessarily accessible. That way, many women cannot be what they cannot see. We also have to look at the prior methods that exist. Sometimes people ask, well, what about microfinance? Microfinance has been there, but it has kept women businesses at the small micro level. And what we're looking at is catalytic capital that can actually move businesses from operating from the very small to the medium enterprises to the very large businesses. I also think globally, when we've talked about women and gender equality, we have put a lot of emphasis on board representation as opposed to a wider mandate in gender equality. Although we don't have as many boards as we used to that have all male boards, we have to think about the company culture, the workforce, and the ability to join the C-suite or management. So this leads me to my other point. When you're going to invest in women, will you have a direct or indirect strategy? If you have a direct strategy, it means that you are likely to deploy capital directly to women-owned enterprises. If you choose this strategy, then I recommend you really understand the market context. You might do this by doing a little bit of research or building on the research that is already there to understand, are you dealing with women that are formal or informal? 90% of African women work in the informal sector. We also have growth pains. What is it that is causing women businesses not to grow? Is it a collateral matter? Collateral is a big issue when it comes to financing in African countries where people are looking for the underlying physical asset. Yet we're dealing with a patriarchal society where many women do not actually own land. What about the documentation that surrounds the process of getting money? Sometimes when we look at it, what are we expecting people to fulfill? The hoops people are meant to jump. Are we designing criteria that is favoring highly educated sort of MBA types that would apply? In that case, you are going to crowd out local participation. You are going to crowd out women. In terms of the sectors, where are the sectors that women are prevalent? So when you're basing on your direct strategy, are you looking at sectors that women are predominant? Are you looking for sectors that you can actually introduce and strengthen women's participation? This is interesting. It can happen in sectors that like technology, renewable energy, making sure such a STEM that you're not leaving women behind. We also have to consider the stage of business. Are you the type of investor that's only considered at very late stage, mature level businesses? Then you will be missing a whole gap of women because a lot of businesses are early stage. A lot of businesses are new. And guess what? Because of COVID, a lot of businesses had to pivot to start new lines, making them actually really early stage startup businesses. And then obviously it's the size of investment. Africa is known for infrastructure deals. We are also known for some level of big export and agri deals. And we're also known for some resource deals. But we also have to look at what is happening at a cross-border trade, retail perspective. The size of investment can also limit our direct interaction with women. So one of the ways to actually skin the cat of getting more women businesses is basically to utilize partnerships, local partnerships to source pipeline. Have a really strong mobilization and deal sourcing strategy and a team that demonstrates intent. What do we mean by that? Have boots on the ground and demonstrate your ability to draw and attract women by having women-only calls. Understand the technical assistance gaps that women face, in addition to the time constraints that women are available. So digital courses that allow women to self-paced learning, allow women to self-select the areas that they have a gap in. Women are not homogeneous. So you can use this technical assistance to build trust and confidence and demonstrate track record. When we look at the indirect aspect, what can you do with indirect? You can work through financial intermediaries. You can also look at your existing book and look at your book and say, well, before I probably did not deliberately put gender as a criteria as I was investing. I'm looking for it. I was looking for it previously as a post-investment outcome. How about looking at your existing investees and liaising with them so that it's also a mutual discussion and agreement on how you can incorporate more gender-based metrics. And an indirect perspective is also seeing how many women are available in the supply chain and is there an opportunity to increase them, especially when you're working with a very male-dominated, well, it could be telecommunications, it could be manufacturing, but being deliberate to source women that are supplying it and also creating and solving the problem. If you find that the women are smaller and less experienced, link them up with other buyers to come together. Be part of the plan that also provides the financing that links with this, and also work together with local women networks. And the question that should be in your mind is, what is the reach or impact through my indirect strategy? Are you looking and holding accountable the people that you are actually deploying money through to reach the number of women? And how committed are the intermediaries to moving the needle? Meaning that we're looking for systematic change. So you can't talk about investing in women without mentioning the 2X criteria. And what really is the 2X criteria? Whether a business is majority owned by women or founded by women, the share of women in senior management or on the board, the share of women in the workforce, whether a product or service specifically or disproportionately benefits women, and if a certain percent of loan proceeds in the deal to financial intermediaries supports women. I say the 2X, brilliant as it is something that we have to stretch when we are doing an investment. We must challenge ourselves further with the percentages we're aiming for. Let's go for 50 plus 1. Let's go for the 60%. Let's go for the 70%. Let's look for more than one criteria when we're investing in the businesses. And let's look to fulfill as many of these low-hanging fruits as we continue to look and structure a deal. Make it part of the due diligence and deal structuring process. So what are some of the core areas that you can invest in women? Well, the leadership one is something to be really concerned with. This is not only leadership at a board level, but really looking at the C-suite, the executive management, and the CEO roles, and really ensuring that women are in roles of power and influence. So you're looking at the operations role, the commercial director role, the CFO roles, all those roles, you can bring women into those roles and have them organically grow through the organization. You can also invest in women through entrepreneurship, looking as women as founder, women as co-founders, looking for their majority sort of ownership within that, looking for women as innovators, solving female-specific problems, I'm looking at women within the supply chain. There's also other ways to influence how you invest in women, and that's through policy. What are the policies, especially if you're working in an industry that is resource heavy? Are the workplace force policies open for female staff? Is it safe for women to actually work, even in a factory? Is it safe for women to be there? What is the power dynamics if you have a male staff? Are you looking at policies like sexual harassment policies? Are we looking at maternity and paternity leaves? Are we looking at promotion? Are we analyzing gender pay gap? All of these matter when you're actually investing both in listed and unlisted securities. Another thing is, as you invest in women, is to see how you can work through women through their networks. Use the networks that women are already in. When we did a study at Grasham Machel Trust, at least 50% of the women belong to a network. We have specialized in building networks across Africa, and women love network because of the peer networking support, because of the capacity building, because of the role model and the goal setting. Try not to create your own unique network, but leverage the networks that they are. And then there's a way of corporate social investment, really just as an organization going out to not only address and headline women conferences, but also support civil society organizations that are addressing female challenges like access to sanitary towels, gender-based violence, organizations that are doing hard things. Demonstrate your support there. And also look at what products and services targeting the female segment. Look at the investees that you're investing. Look at your network and say, are there companies and stakeholders that are customizing their product and service to cater for the female segment? There are a number of women that have just died just because the airbag in cars was not really set to a female body. So we want to increase gender equality and awareness. And lastly, in the messaging, avoid gender stereotypes and depictions of women in own company messaging. We don't want messaging that enhances or reinforces traditional views. We want to show how women are evolving. And how can you do this? Well, some of the products to access women is through social impact bonds to reward and encourage lending to women, technical assistance programs focusing on investor readiness and pivots as a result of COVID, bank products with an emphasis on contract financing, invoice discounting products, guarantees, products that avoid collateral or have very high ceilings before you need collateral, private equity funds that have hybrid funds, which include blended capital, bullet loans, revenue participation that are formed by female fund managers, listed companies that use gender-based indexes to watch how they invest and looking for things like lawsuits, and then investment banking when a business is actually coming to market. Are we judging them also using a gender-based criteria? So integrate a gender-based into your financial to generate impact. And the main thing with impact is that you can change attitudes and behavior, both internally and external. Don't try and change your investment policy. Don't try and change your investees if internally you also don't have a culture that is supportive towards women. Allow and see how you can align with various SDGs. The SDG 5 on gender equality allows you to meet other SDGs like on good health and well-being, quality education, decent work and economic growth, climate action. All of these can really push how you achieve the sustainable development goals. Look at the jobs that you're creating and make sure that the jobs are not only seasonal jobs, but they're permanent, they're high quality, and they also involve and integrate the informal sector. Collect gender disaggregated data to determine the baseline and share insights, not only retrospectively, but purposefully. And as you do it, determine the percentage of women in your mobilization process, the percentage in the application acceptance, percentage in the follow-on investment, percentage when it comes to how people are discussed in different due diligence forums. So set ambitious targets and work towards them publicly. So investing in women is a long game. Don't do it because it's a quick win or a fad. Do it because it makes business sense and the impact is so rewarding. Women businesses make returns that will not be compromised. So please be deliberate about it. So this is not a charity. It is something that actually makes great business sense. I wish you all the best as you go out in the world to invest in women entrepreneurs. Thank you.